No, I'd love to pipe in here a bit because when you ask that question, where else would we go? I think
Hey everyone, welcome back to Finance Wolf. Today we're diving into a discussion led by Cathie Wood on Bitcoin and crypto. According to Cathie, analyzing the S&P 500 can provide valuable insights, and when we look at the Nasdaq, it's crucial to examine the top performers in each sector. Many companies owe their success to past achievements, but the world is at a pivotal moment, facing significant disruptions that challenge the traditional order. Bitcoin encapsulates this shift, presenting both opportunities and risks that we're evaluating closely. The evolution of the world's functioning is remarkable, especially considering the unprecedented misallocation of capital in history, as Cathie notes. After events like the dot-com bubble burst and the financial crisis of 2008, there's been a heightened focus on risk mitigation globally, affecting traditional investment approaches. Cathie's strategy involves aligning with benchmarks like the S&P 500 and Nasdaq while also engaging in discussions with other portfolio managers and industry professionals. However, debating whether Cathie should slightly outperform or underperform these benchmarks by a few basis points lacks substance and is frankly absurd. In the video, Cathie covers a range of topics, so be sure to watch till the end, like, share, and subscribe to our channel, Finance Wolf. Thanks for tuning in.
You're alluding to is if you look at the S&P 500 and NASDAQ, and you look at what's at the top of each of those, the companies there they've hit that level because of past success. And if the world is going to be disrupted and, the traditional world order is going to be disintermediated, that's probably not the place to go. However, and we've been fighting this battle for 10 years, including Bitcoin, and we are providing exposures to the new innovation, the way the world is going to work. And what has happened, and it's unfortunate, I think it's the most massive misallocation of capital in history, is after the tech and telecom bust, and even more so after 08, 09, there was a move towards risk aversion or risk mitigation. And what did that mean to the traditional world? It meant, let me get close to my benchmark. Let me get close to the S&P 500. Let me get close to the NASDAQ. In fact, I've seen conversations among portfolio managers in other firms where, the benchmark is their bogey. And shall I be 10 basis points above on this name or 10 below? That's a ridiculous way to invest. It's absolutely ridiculous. You need to take a white sheet of paper and say, what is the world going to look like? Not what has happened and what does the world look like? And especially given how quickly these technologies are moving. And the great thing for ARK in terms of everything that we do, and I know it's true for 21 shares, but they only do digital assets. But the great thing for us is there is a new investor who understands and accepts this notion that volatility is part of the price you pay for this new asset class. And many, we've been referred to just our basic ETFs in innovation as a new asset class as well. That is, we're not a new asset class. These are equities. Bitcoin and digital assets, that's a new asset class. But now we have an investor that understands that volatility is part of what you need to expect. I'm not saying they're comfortable with the downside volatility. They love the upside volatility. Volatility is a very good thing on the upside. So I think this whole space, this new asset class, is helping investors understand what we've been trying to communicate for the last 10 years through Bitcoin, of course, but also through these other innovation platforms. And thank you for saying that, Ophelia. we, it's, to me, it's astonishing. To me, this is back to the future. When I started in the business, I was in college, 1977. What ARK is doing now is what we were doing back then. We're trying to envision, how is the future going to evolve? And we were in 1977 talking about Hong Kong 1997, 20 years in the future. And that became a very productive conversation over time, right? We were ready for the handover and, what might happen after that. We were ready for China integrating more into the global economy. Now, I know that it's doing the opposite right now, but, you have to think about the way the world is going to work, not the way that it has worked. And that is why our strategies, we feel, are fulfilling an unmet need. That's why I started ARK. And I think, and this Chris Berniski also did coin recently, the DeFi can sound intimidating to people, defiant and so forth. So he was saying, look, the way to help people understand what this is, as Ophelia just said, is this is the internet financial system. This is what the developers did not put in place in the late 80s, early 90s, as they were evolving the internet, because they never thought the financial services or commerce would take place on this thing that we're all using now. So I think stepping back and talking about it that way, and then also describing, how young people are behaving. Even the most seasoned investors out there, they have children or grandchildren, and they're looking at how they spend their time, and they know that more than half of their leisure time or discretionary time is spent online. And so this notion of social status moving online with these immutable digital assets is a thing. They're not doing it, but they see their children and grandchildren doing it. So if you kind of describe what's going on out there right now to people who just put it in context, and Ophelia is absolutely right. When you think about the internet, how much it has been built out over the past 30 years, that's kind of priming the pump. And now you're just putting this IFS in, this internet financial system with native currencies native to the internet, taking out the middlemen, bringing in more peer-to-peer. It begins to make a lot more sense to people who just wouldn't even think about it before.
According to Cathie Wood, the internet's financial system lacks certain elements that developers overlooked during the late 80s and early 90s. This period marked a significant evolution in the internet, catching many off guard regarding its eventual impact. Initially, it wasn't anticipated that financial services or commerce would thrive on the platform we now use. Cathie Wood offers a broader perspective on this evolution, noting how even the most seasoned investors may have children or grandchildren who are deeply engaged in online activities. A considerable portion of their leisure time is spent online pursuing personal interests. While the concept of social status undergoes shifts in the online realm, the utilization of immutable digital assets may not be actively considered by older generations. However, they observe younger generations embracing this new paradigm. If you found value in this insight, please support us by liking this video and subscribing to our channel, Finance Wolf. Stay tuned for our next video. Thanks for watching.